All right, so we are looking at the trade journal. We pretty much finished this week, so we can pretty much like highlight this thing. It's complete. So that's complete. I need to fill in this journal entry. That's not done yet, and fill in the video and a snapshot of the account performance and things like that, just to like document the journey. And then coming Monday, that's tomorrow. No trading. Mondays and Fridays are statistically bad days to trade, so we're not going to touch it. I mean, it looks volatile anyways. There's a gap on the open and on the futures, and we're waiting for the H4 market structure to break, and that's just the biggest message. We're waiting for this thing over down here to break to the downside. As you can see, the one on the upside is about to break, so it means that we just got to wait longer. And I mean, it could be as soon as Tuesday or Wednesday. I don't know. But we're just pretty much taking our cues mostly first from two leading indicators. One is the Williams Money Flow Index. So the higher price will go, the more the institutions will go bearish. Like we're almost down to the bearish swing. So in terms of risk to reward, and the confirmation, I mean, we're already in a downtrend, so that's already confirmed. There is no switch to an uptrend yet. We're still, the bull fake out is still intact, and the bull fake out is seen by this moving average channel on the 40. Okay, it's not in this one. We would have to open up this the weekly and daily resistance. But it's mostly seen. Let's switch it over, and then let's get rid of the bear trap. So it's mostly seen on this one. We're in the bull trap right now. So the higher we go in the bull trap, the more likely we'll get trapped as a bull. And the goal is to not be the bull trap, be in the bull trap or get caught. And we can see here that this level is pretty close to the quarterly close, the previous quarterly close. This is something we're watching like a hawk because, oh yeah, it's right where that doji is. And the reason is because we're expecting a move in this quarter to the downside. We have no idea what month. It could be this month. It could be February when the rate hike actually comes out. It could be when Powell speaks this week. And it's unknowable. You know, there's a probability for each one, but because this week is closer, we're just going to assume, we're going to try and stack the deck that it's this month. And, you know, depending on how much we want to lose, that's kind of up to us. But so this is the line of the quarterly close. And if we get anywhere close to this quarterly close, it's over. It's going to be dropping like a rock. And the yearly open, I think, is up here. So we're closer to the yearly open than we are the quarterly close. So if we turn on that indicator right here. Oh, did they give it to me? There it is. So yearly opens right here on the gap up. So that gap's got to get filled, and it's a question of when. So another good point of adding. So we got not only the previous close as a resistance point. So we kind of need this week to close to figure out more information. And the more we go up, the more comfortable it is to get ready for a short. I just don't know how long they can prolong it. You know, based upon December, it seems like they could prolong it pretty dang long. You know, for a rounding bottom, that took 3-4 weeks to really develop. So then for a rounding top, what is that, another 4 weeks? It's totally possible. So, like, it's hard to say, but, you know, as far as like a rounding top, if that were to happen, I don't know. It's just so hard to come up with a good estimate, and the best estimate is to see this weekly close and see if there's any 4-hour market structure to the downside. Um, you know, I'm gonna take a shot at it. That's it. So that's the plan. We got lots of entry points if we wanted to, go be really aggressive, which I'm not 100% sure I want to do. I'm thinking I'm gonna, even if we get into the point of resistance, I'm waiting for that H4 market structure break, and then a retest in that breaker with a smaller market structure break, because I'm just done playing games with this market, man. Like the rounding tops, rounding bottoms, and just how long they last, and how crazy they are. Like depending on how big the range is, I'm not even gonna touch it. Like the risk to reward just makes more sense to wait for the downside, and the institutions are starting to migrate to the short side, and it just takes a while for things to flush out. And if we were to just take a look at the other indicator, which is timing solutions, I think maybe we already did that, but so we took a look at money flow index, and they're starting to lean bearish the higher we go. We look at timing solutions, where we got a point of interest. We got 2 points of interest, and we're going to chart it. So we're really close to an inflection point, according to this. And as far as like the market front running, Powell speaking, or the CPI release, I have no idea what's going to happen. Like, to be honest, I'm just trying to take action on what I see. This is, of course, a little more leading, and then we go into more real time, which is the market structure breaks, and to be able to give us a higher certainty for a probable action. We're coming really close to like the first point of action, and that's roughly the 10th, Tuesday, plus or minus a day or two. So we're just waiting for a 4-hour market structure break. We're not doing any 15-minute market structure break to the downside, not even to the upside. It's just not worth it. The 1% squeeze, or I mean, even if it turned to 2 or 3%, I don't know. I don't like going into a daily breaker. I'm more content with just waiting until it flushes out, even if it takes 2 4-hour market structure breaks to the downside, which it might, because I don't know. This market seems to be going by the news, and the Fed rate hike in February seems like the best bet if we were to bet on the news controlling the market. So, and that's illustrated by this point, this hump. It's right around the beginning of February, like February, the first or second week of February, and then leading on down. I don't know. I just like to think that, I don't know, it gets it out of the way, and then we have a huge rally into July, and then a dump into Q3, going into 2024. I don't know how it's going to play out exactly, but I have no idea. So we're just kind of waiting until it does its thing, and push comes to shove, maybe it is February, and then we get the bottom almost very similarly to 2020, and we just let it play out. Now comes the question of like the MACD. So we've been watching this MACD. We had the weekly cross, and it looks like the weekly cross is coming back up. So that's a very interesting what's going to happen there. I don't know. It's very confusing. We got the daily cross in the MACD. So I honestly have no idea what the heck's going on with that. And I obviously would like it to not cross up on the weekly. So it depends on where we close on the weekly. Like, I hate to say it, but for a lack of a better answer, that's the answer. It's just we got to see where the week closes. In the first 2 days, it just seemed like crazy volatile. Even on CPI day, I think, which is Wednesday, and which doesn't seem like a good day to trade anyways. And it's just a good big chance to squeeze out bears. Like, that's what it seems like. And before a possible scam pump. So it's a good position for institutions to squeeze out past bears to take their position. That's what it looks like. So, but we are watching on the what's it called? So this one had a reversal retest on the daily, so that's interesting. It's in a nested breaker. I don't know if I trust it. These daily breakers are so choppy. I don't trust them. Don't trust them. But yeah, I don't know. This thing could go make a new high. I have no idea. But game plan. We're waiting for an H4 breaker. It might be to the second time, so we need to have really good risk management on the first time. Just because the first time is not trustworthy. We have to really assume that. So the case study of what we're going to do, we got to turn those alerts off because it's too early for that. We need the 4-hour market structure break. So I might as well even turn off my 15-minute market structure break alert. All right, where is it? There it is. I'm going to stop. And then we're going to also, to not get out of hand, we're turning off the 15-minute reversal alerts. We're just not ready for it. There we go. Alerts off. We're going to turn off the 1-hour alerts. Oh. Okay. We only want the 4-hour alerts. We're going to get one to the upside, but we're not going to take it. We're only going to take the one to the downside. And unless invalidation for the bears is we close the week above this level, preferably close of the week above there, which would be the top of the weekly moving average channel, 40. Yep, that's it. If we close the week above 40.61 spot 65, I will become a bull. But if we have no weekly close above that level, the bear case is still valid, but it's invalid when we close the week above 40.61 spot 65. So we are looking for an H4 breaker or a reclaim of this level 39.13, or an H4 market structure break into this 12-hour resistance of 39.3105. I would like to think that the market would front run February, and they would listen to what Powell has to say, listen to what the CPI has to say, and then make their decision right then and there and front run February. That's what I would like to happen, because that's what my portfolio is positioned for. It's positioned for a huge short. Like 100% of the portfolio is short. So if not, I'm willing to hold through the drawdown. I got through the fill of the fair value gap. I'm willing to hold through it. It'll bring me down almost probably to my inception. But the thing is, February will kick butt. I'll lose on January. I'll kick butt on February, and that's a concession I'm willing to take. Like, if you're gonna take a risk, you got to do your homework and see what you're okay with. What your tolerance is. Okay, but that's pretty much it for the week. The plan. Now we wanted to figure out. We got new accounts. We wanted to figure out the risk management side. Excel. What is that? A sheet? Yeah, spreadsheet. We want this one, Apex accounts. This is not the one we want. We want Ninja Risk Management Calculator. All right, so then we need to go back to the plan. I think it had it on this Apex accounts. There it is. Trailing threshold 2,500 and then profit goal 3,000. So 2,500 is what we would use. So that's what we use as the cash on hand. Okay, and then we want that amount of ticks, and then we want 1%. So we can only do one, roughly, 2/3 of 1 micro. So we're just going to do 1 micro. It's going to be, it's going to be almost 1.2, 1.3. I would say 1.3%. Yeah, 1.2, 1.3. It's not bad. But yeah, we'll have to go low and slow. And that's a testament of what we got to do. So 1 micro, put that in the trade plan. If I'm gonna make a case study, let's make a case study, right? All right. So time frame. Just need to make this stupid simple. 1 hour and 15 minutes. Trading times locked in. MES 1 micro. Size 1 micro. Per break even. So if we get 1 break even, we could do 1 more micro. And then we want to really get the H4 breaker on the retest, and then a 15-minute market structure break to the downside within the retest of the 4-hour breaker. And then trading strategy, we're doing the stop hunt. We're waiting for the breaker, pretty much. We're not going to be aggressive on the stop hunt. We're going to use 15-minute breaker retest with regression mode on polarity ATI long side, long armed. So regression takes the opposite of those who would get really bullish, and it's a bull trap kind of entry. So the main method, I guess the main thing about it is that how a market, there's always someone taking the other side. If you sell, so there's someone buying. We are waiting for someone to get really bullish in a specific area, and if they do, it would trigger an entry for us. The bot would get us in, and we're only going to turn it on when it gets into that zone, and that would give us a good chance to having a position for surviving. And then if it survives and we get it to break even, we'll add more position build. So and then everything else stays the same. And then this is our scaling system for being able to increase. We got to redo it because no, it actually stays the same because we're doing micros. 1%, which equals 1 micro now. 2 to 1. Risk to reward, max drawdown 1.5% per day. That makes it really difficult. It means that if we were to lose one, we can only do a second trade with half 15 tick stop loss instead of 30. Basically a scalp. So this is for Monday. We're gonna take out the highlight, but all of these we gotta follow, and then we'll have the result. And I think this is updated now, and I guess I'll put the video link to referencing going over the trade plan specifically, because what we're really waiting for is a 4-hour break up into this area, and we have no idea what's going to happen, how choppy it's going to be, how many 4-hour breaks to the downside we're going to need. But typically it's 2, but we would be okay if it just took 1. We would, the less the better, because that means there's less waiting. But that's pretty much it. Mainly this is this is the thing. We got a ping pong thing. We got naked H4 breaker to the downside. It's going to come back and retest. We got a gap below the daily and weekly, but it's going to take time to get there. And there's a lot of points of interest. One is this quarterly or 6-month close right here. That if it were to get back underneath, that's huge resistance. That's a huge confirmatory. We are going down. And then there's the weekly open, the previous week open. If we come back below that, that's really interesting. It's a really big nod that we're going lower. And then there's also the yearly and monthly open. If we get back below that, that's a big deal. That means it's not holding, and it wants to trend down. And so there's like big points of interest there. And then we got the resistance over here. A reclaim to the downside would be a really negative signal. And then we got some H12. There's a swing high here. I think it's this one. It's basically this weekly close, this H12 swing high. And then there's a H12 swing low. I think it's roughly this one. And yeah, like a pivot and any kind of reclaim to the downside would be some really good entries. But the thing is, we're not going to do any of that. We want it to go into it, but we're not going to act on any of that. We're only going to act on the market structure break, and then a retest or something related to retesting the 4-hour breaker. And then once it breaks, there's no example. I would have to. Once it breaks and retests, I guess because this is a naked. So if it breaks like this and it retests and resumes down, we get a 15-minute break to the downside. We're taking it. So that's the overall message. I wanted to see if I can make this as short as possible. We went over the fundamental, which is the institutions, the math, the two possibilities of what it could be, and then the overall trade plan, and for the most part, what's going to happen throughout the week. Most likely, we're not going to trade within the first or second day. We're waiting for a retest of that breaker and maybe a 15-minute or a 4-hour breaker. We could do like a fast and a slow. I don't know. We might do it. Not 100% sure, but we could split the accounts. So that would be the new case study, is that we split the accounts. We got 4 accounts. Half will be dedicated for a 15-minute breaker on the H4 retest up in here. Up in here, we would take 2 accounts, and we would take a 15-minute breaker off of that onto the downside, off of the orange box. The orange box is roughly the 4-hour breaker here, caused by this 4-hour candle close. A retest and a 15-minute breaker here. We'll take 2 accounts. We'll go try for an entry to the downside. Now, if that's not successful, we're waiting for a 4-hour breaker, no matter what. And I gave it a chance, and we capped the risk. We made the loss small, and risk to reward, we're going to be happy. So that's pretty much it. And then we'll wait for a 4-hour breaker, and then we'll do a retest and try to get in on the retest, and then capitalize on that to the short side. So that's pretty much it. If we close the week above the bull trap on this weekly resistance, if we close the week above 40.62, the bears are invalidated. We're going long. But as long as that's there, and as long as we don't close above that level, the bears are valid, and we're shooting for the short side. Risk to reward, rewards to the short side. Risk is for the bulls. So that's it. That's the trade plan. Thanks for watching.